Well, let's talk about Deutsche Bank a bit more. I'm now joined by Professor Hans-Peter Burghof, Professor of Banking at the University of Hohenheim. Welcome to the studio. Professor Burghof, why should we be worried about Deutsche Bank?
Well, it's by far the largest bank in Germany, and this means in the largest European economy. It's a truly international bank, so it's much interlinked internationally. So if there are troubles, they're not only in Germany, they're all around the globe, and that means it's a very systemic bank.
The bank's relatively new CEO, John Cryan, seems to enjoy some trust from shareholders. He's said to be the new broom to clean everything up. Is he the right man, and what's his strategy?
Well, I think he's much better than what we had before, at least. If he's the right man, we'll see it afterwards, for sure. But he's not linked with the old story of the Deutsche Bank. He's not linked with investment banking, with the old mistakes they've done. And so he might be able to enter into this battle for a future for the Deutsche Bank much more ruthless than the ones who had been inside. And that's when he says, I'm the new broom, he comes from outside. He's not like Mr. Jain, linked with the old investment bankers. And so he can be tough. And that's the first thing in such a strategy. You must be tough. You must try to do things fast. This is not very nice. It's not a very nice strategy he's following because he has to cut down size. He's got to cut down businesses which don't pay off, and he must get rid of people, and that's never a friendly job to do.
Everybody seems to be bashing investment banking. Investment banking has made the bank billions over the past 20 years. Now everybody wants to get rid of it as quickly as possible. Do you see the bank going back to the boring but stable institute it used to be?
First, I would ask, did investment bank really produce so high profits? Because much of the profits were based seemingly on fraud. Some was just zero-sum game between different banks. Some of it is just profits today and losses in the future. And so much of the problems today of Deutsche Bank come from the old investment banking. So I have doubt about that. I hope the Deutsche Bank will become boring again. But we shouldn't call it boring. We should call it reliable. And that's what clients need. I mean, you don't have a bank which changes every day and wants a lot of money to earn as fast as possible with you. You want to have a bank which says, OK, your perspective is 30 years, so my perspective with you is 30 years. And if Deutsche Bank become this, it would be very nice.
Hans-Peter Burghof, until here, thank you very much. Deutsche is by far not the only bank in trouble around Europe. The British banks have been hit hard by the Brexit vote to leave the EU and now face an uncertain future. Italian banks are sitting on an enormous heap of bad debt. And because the banking system is so incestuous, many other lenders are in trouble too. So is there a new pan-European banking crisis in the making? Here are some facts and figures.
For months, the Brexit referendum campaign kept Europe's financial markets in suspense. When the British did vote to leave the EU, the banks were the first to feel the consequences. Stocks in British banks crashed. Trading in Barclays and RBS shares was suspended briefly. But UK banks aren't the only ones in turmoil. This year, Deutsche Bank's share value has plummeted from almost 30 billion euros to just 16 billion. Germany's biggest financial institution has lost almost half of its worth. In Italy, Banca Monte dei Paschi has suffered staggering losses, and two-thirds of UniCredit's value has been wiped off the books. Shares in Greece's Piraeus Bank are worth just half what they were at the start of the year, as are stocks in Switzerland's second-largest bank, Credit Suisse. These worrying figures show Europe's finance industry is anything but healthy, though the risks are unequally distributed. Eurozone banks are sitting on 900 billion euros in bad loans, a whopping sum, and Italian banks hold more than a third of them. Many firms could no longer operate profitably in Italy, a country plagued by corruption and a poor business climate. The lesson Europe learned from the first banking crisis was that risk should be shouldered by investors. But it looks like it's taxpayers who'll be bailing out Italy's financial institutions once again. This example from Germany shows what that means. The German central bank estimates that since 2008, the cost of rescuing German banks stands at 236 billion euros. That's 3,000 euros for every German taxpayer. It was ultimately taxpayers who bailed out the banks. Will it be any different this time around?
So we're back with Hans-Peter Burghof. If we're looking at other European banks, and in particular if we're looking at Italian banks, that's not a pretty picture, is it?
Not at all. I mean, if you said before, Deutsche Bank is a potential problem, this is an actual problem we must solve, and it's several hundred billion euro heavy. So it's not like saving Greece, which is costly, but can be done. So we must really find a solution here.
There's a big argument going on at the moment that Italy wants to rescue its banks with public money, and that would contravene EU rules. Why not let the Italians get on with it and rescue their banks?
Well, because we have to guarantee their state debt in the end, and the European Central Bank is helping them to carry this heavy state debt, and Italy is amongst the countries on earth with the highest level of state debt altogether, so they have no reserves for that. So, I mean, we made this European Banking Union under certain conditions, and now under the first stress situation, we forget about all these conditions. What does it mean for Europe? Can we trust in anything which happens in Europe if we just follow this path? On the other hand, what's the alternative? A general banking crisis in Italy might be very costly as well.
And contagious. Explain to me Mario Draghi's role in the Italian banking drama.
That's a very difficult point. I mean, it's the European Central Bank which plays a central role in financing the European states, especially Italy, through low interest rates. He's responsible for this development because he's been head of the Bank of Italy for many years before the crisis, during the crisis. So the wrong incentives which led to these problems now in Italian banks were set while he was responsible as a banking supervisor. And
now he's on the other side.
Well, he has to cover up now somehow these things he's been doing before. The problem was after 2008, when we had a big crisis, Italian economy did not recover, and the Italian banking system was mainly used not to finance companies, but to finance the state. And so the companies did never really recover. And that's his period when he was in charge in Italy.
So we're damned if we save them, and we're damned if we don't.
In fact, there's no real good way out of it, so I think we'll have a lot of, fun this summer with this tragic topic.
Hans-Peter Burghof, thank you very much.